All right, good evening, ladies and gentlemen. Welcome back to the Australian Gold Weekly Review. We are shooting episode 11 on the 11th of October. Thank you so much, everyone, for your reception on the last video. We really enjoyed seeing the comments come through, and we also enjoyed having a look at the feedback that you guys have been giving, because there's a lot of positive feedback and there's also a lot of scope for improvement, which we have been implementing with every passing episode. So thank you so much for your reception, and thank you so much for your active involvement in making this a joint project between us and you. Once again, I am joined by the managing partner and founder of Gold Hub Australia, Mr. Brian Chu. How are you, Mr. Brian?
Yeah, I'm going quite well, Ved. Very interesting week that we had, especially what happened on Thursday night, Thursday trading on the US, and also Friday trading. And we'll be talking a little bit about that. So, yeah, amazing things have happened.
Yes, for sure. Amazing things have happened for gold. I can tell you that before I go to sleep every single night, I've made it a habit to check gold prices, because that's how volatile things are right now. And I remember just 2 nights ago when I pulled up TradingView and checked gold prices, it had soared past 4,000. And literally, I think 24 hours later, it was back to 3,950. So a lot of movements happening at this point, and I think we should change this series to the Australian Gold Daily Review, the way that the daily movements are happening. But I'm sure our editor's not going to like that idea. So we'll stick to the Australian Gold Weekly Review, and a lot of exciting things happening for the Australian Gold Fund and Gold Hub Australia, as well as we prepare for the Australian Gold Conference happening at Barangaroo in Sydney, New South Wales, Australia. So if you are available, we welcome you to join the conference, and there's a lot of exciting things that Gold Hub Australia has to offer to you. And in fact, we are proudly sponsoring an honorary award at the function as well. So looking forward to that, and the team has been all hands on deck preparing for the same. For this episode, however, we are not focusing on movements in gold, silver, oil, as well as metals and mining equities in general. What we are doing instead for this episode is we've picked two companies which we think is essential for every Australian investor to know about and at least have on their watch list, if not make a decision to currently buy or sell the stock. And that is simply because of the exceptional growth stories that make for the basis of these two companies, especially the first one that we're going to be talking about, which is Mr. Brian's pick, by the way, and the second one is mine. So Mr. Brian's pick for this week is Kingsgate Consolidated, and my pick for this week is Alkane Resources. So these are the two companies that we're going to be focusing on, and hopefully you get a lot of insight into these companies, how they've been doing in the last few years, what their growth story is, and in the case of Kingsgate Consolidated, what made for such a spectacular comeback and stock price performance in the last few years. We would like to remind you that none of the content in our video qualifies as financial advice, and that if you are on the outlook for financial advice, we recommend you seek a licensed expert. And with that being said, let's get straight into the video and start with Kingsgate Consolidated. But before I sort of get into the comeback story of Kingsgate Consolidated, I'd like to ask Mr. Brian why he chose this company to focus on.
Yes, the reason why I chose Kingsgate is because if you look at what's happened with the price of gold and silver especially the past 2 weeks or so, gold's above 4,000 Australian dollars, 4,000 US dollars an ounce. Sorry, same time last year, gold broke above 4,000 Australian dollars an ounce. It's now broke above 4,000 US dollars an ounce. But more importantly, is silver. Silver is now trading at $50.18 US an ounce, which has broken the all-time record that was set back in 1980. And also the last time it traded that high was in 2011 in April. Now, Kingsgate Consolidated is both a gold and silver producer. So a lot of people might find this company quite appealing. But more importantly, is because Kingsgate Consolidated, they have had a very, very good run in the past 5 months or so, having broken above $4 in its share price. It's only recently pulled back a little bit below, only from the sell-off that we saw on Friday as the market made a small panicked a little bit because of the pullback in gold and silver in the close of Thursday night trading in the US. But at the same time, Kingsgate also released its September quarter quick update, showing that production has improved, and they're also generating quite a bit of surplus cash flow. It is a comeback story and a major one at that, and I thought that's why it's worth digging into it, especially because it looks like it's on a trajectory for significant growth in the next 2 to 3 years.
All right, thank you so much for that, Mr. Brian. And I absolutely agree about the fact that this is a great comeback story for Kingsgate Consolidated, and it's one that every Australian gold mining equities investor should know. In fact, I can tell you that when you sent me the comeback story for Kingsgate Consolidated to prepare for this episode, I was ready to use it as the teaser article for this episode, because that's how compelling this story is. And for our viewers to know, let's rewind to 2014 when Kingsgate was a multi-asset producer operating the Chatree Gold Mine in Thailand and advancing its Nueva Esperanza silver gold project in Chile. At the time, Chatree was producing between 140,000 to 200,000 gold equivalent ounces per year, with an AISC of roughly 1,000 to 1,400 US dollars per ounce. So healthy margins for a modest mid-tier miner at that point in time. But everything changed in 2016 when the Thai government abruptly ordered Chatree's closure over alleged environmental concerns. This single event crippled the company with nearly $100 million in debt. Kingsgate was forced to sell its Bowden's silver project and enter a 5-year legal battle against both the Thai government as well as its insurers. The company alleged the shutdown was unlawful under the Thailand-Australia Free Trade Agreement, which is also known as the TAFTA, while also pursuing a separate case against Zurich, Australia, for political risk insurance. By 2019, Zurich Insurance settled, paying 82 million Australian dollars and agreeing to co-fund Kingsgate Consolidated's arbitration costs. Meanwhile, momentum began building on the Thai front. Between 2020 and 2021, the government gradually softened its stance, first allowing Kingsgate Consolidated to process gold silver sludge, then reissuing exploration licenses at the Chatree. However, the tide truly turned in December 2022, and I think this is the beginning of the comeback story, when Kingsgate secured permission to restart Chatree after more than 6 years of care and maintenance, and by March 2023, production had officially resumed, making one of the most significant reopenings in the Australian gold sector in recent memory. Chatree's restart began modestly, with the initial throughput being around 1.5 million tons per annum, ramping toward the 4 to 5 million ton per annum nameplate capacity. By full year 2024, the mine was producing approximately 60,000 to 70,000 ounces of gold at an AISC of around 1,900 Australian dollars an ounce, which is not too bad considering their AISC of 1,000 to 1,400 US dollars an ounce back in 2014. The company also re-established its Thai subsidiary, which is Akara Resources, as the local operator, which is a key condition of the government's settlement terms. And finally, Kingsgate Consolidated's turnaround has been striking, from a market cap of roughly 150 million Australian dollars in 2021 to over 500 million Australian dollars by mid-2024, which was supported by gold's rally as a tailwind and improving investor confidence in its Thai operations. The company has also eliminated most of its major debts thanks to insurance payouts, a capital raising in March 2023, and rising cash flows from early production. And on the markets front, Kingsgate share price, which traded below 50 cents, I believe, in 2020, broke above $2 in 2024, and I now think they're operating in the $3 Australian dollars range. And this is driven by a combination of operational restart optimism, strong gold prices, and improving margins. So, Mr. Brian, Kingsgate has pulled off what many thought was impossible. They've revived a world-class mine after nearly a decade of political and operational turmoil. With Chatree finally producing again and Thailand seemingly turning pro-mining after years of resistance, do you think Kingsgate Consolidated can evolve from a speculative recovery story into a stable dividend-paying mid-tier producer? Or will lingering sovereign and jurisdictional risks always cap its valuation compared to its Australian peers, like Alkane Resources, which we're going to discuss next?
So thanks for the background explanation of the company's history. I actually have had a long history of owning Kingsgate Consolidated shares. I first bought the company in 2008, I think, actually 2009. I bought Dominion Mining, which was the company that owned the Challenger mine in South Australia, which Barton Gold Holdings currently owns. And Kingsgate Consolidated bought Dominion Mining, and I became a Kingsgate Consolidated shareholder. I rode through the share price cratering to as low as about 20 cents in 2017, 2018. I held on. In fact, I actually rode through two spells where the company share price came down heavily. The first time was 2013 because of gold falling significantly because of Operation Twist. And the second time was because Kingsgate's Chatree mine had to close down. I held on, experienced the comeback in 2019 with the insurance payout, and again in 2021 when the price jumped further after the agreement from the Thai government to restart its mining. Now, the Thai government isn't necessarily against mining, but apparently there was conflict between Kingsgate Consolidated, the company, and some of its employees, who then, I think, sought issues about the environmental problems in Chatree. And I understand from the company's perspective and also from a legal perspective that those charges or those accusations forwarded by the locals have actually been more in favor of the company than the locals. It seems like the locals are actually quite supportive of the Chatree mine because it provided jobs, and in many cases the environmental standards they've actually do satisfy. I think the Thai government at the time may have bowed to local pressure, fearing that they could lose votes if they did not acquiesce to the people or what they claim to be people's demands. The Thai government and Kingsgate Consolidated at the moment, there is still sovereign risk because, of course, working in a country like Thailand, the jurisdiction is quite different to that in Australia. Putting that largely behind the company, I believe, we are seeing that the operations are finally becoming more profitable. The company restarted production in 2023 in the March quarter, I believe. It took a while for the production to ramp up and for the costs to settle. For quite a while, the company was generating a cash, it was actually a cash deficit. They were actually burning cash in the operations. The costs exceeded the revenue. But now, in the last 2 or 3 quarters, I think we've seen that turn around. Kingsgate generated a pretty comfortable increase in the cash balance, and I think this is largely from operations rather than drawing down funds or taking on debt. They actually are also repaying debt. You can see from the share price itself how much it's jumped from about $2.50 in around, I think, June or July, to now it's just under $4. The market is now buying into the idea that the company is in cruising altitude. Will the company be back in the glory days of 2010, 2011, when they were trading at about $9 or $10 a share and paying dividends? I think that there's a pretty good chance of that happening. I won't be able to give a date on when I think that's going to happen because these things are actually quite speculative. But keep in mind that Kingsgate, during its toughest time, the 6 or 7 years that it was not producing, the company actually raised minimal amounts of capital. So the shareholding is still very tight. I think there's about 250, 270 million shares on issue. Let me just quickly check. Shares on issue, 257 million shares on issue. I could still remember for a very long time, even before the mine shut down, the company's shares on issue was in the 200 million zone. So that is actually credit to the company. And I think that is what's going to support its ability to generate solid shareholder return. And if the Chatree mine continues to do as well as it does, there is a chance of them reviving dividend payments. And there's also Nueva Esperanza in Chile that the company will probably aim to develop. And that is actually very appealing because of the amount of silver that is in that particular deposit. So there's quite a bit of potential. And I think that's why it's worth talking about in today's discussion.
Absolutely. Thank you so much for that, Mr. Brian. And I definitely think that there is a possibility of the company to reinstate itself, I believe, in the $8 to $10 range, but only time will be able to tell when that actually happens and how it actually ends up happening. And while we're at it, ladies and gentlemen, remember I said that Kingsgate Consolidated was a $500 million company in 2024. Well, let's leave 2024 behind. Let's talk today. Today, the company is not in the $3 range. It's almost in the $4 range now. It's just 3 cents shy of being $4 a stock. And it is officially a $1 billion company by market cap, having cleared substantially most of its major debt and having a solid cash position, good operations, and the potential of a lot of silver in its Nueva Esperanza silver project, as well as the current gold project that they're running. So a lot of exciting things for the company coming up ahead. A lot of tailwinds as well in the long term, I believe, in terms of commodity prices, as well as the intrinsic operations of Kingsgate Consolidated as well. So we hope you had something to take away from our discussion on Kingsgate Consolidated. And now moving on to Alkane Resources. Alkane Resources also very interesting company in terms of its growth profile. Let me just pull out how much the stock has increased in the last few years. So if you have a look at the past month, the stock has gone up by approximately 4%. Last 6 months, the stock has gone up by 54%. Year to date, which is from January till now, the stock has doubled. Last October, it was trading 123% a discount compared to the current value. And 5 years ago, however, Alkane Resources' share price was much more than it was today, which is shares of Alkane Resources are trading at a 23% discount compared to them 5 years ago. However, the all-time increase in Alkane Resources is 283.98%. So quite an interesting growth story for the company, similar to Kingsgate Consolidated in the manner that they were trading at an all-time high, approximately in 2010 or 2011. And now they're not trading at the levels that they used to, but there's a lot of potential for the company to reach there. So let's get into the growth story of Alkane Resources. And I'll start back in 2014 when Alkane commissioned the Tomingley Gold Operations in New South Wales. It began as a 1 million ton per annum plant mining in the Wyoming and Kelowna deposits, and that processing facility has been running ever since, producing around 60,000 to 80,000 ounces of gold from 2015 to 2019. This helped to fund its expansion to the south, eventually discovering the Roswell and San Antonio deposits. And 2019 was the inflection point. Alkane drilled Boda in the North Malong porphyry project and hit a long run of gold copper porphyry mineralization, which was the discovery hole that changed the company's trajectory and lit up the Macquarie Arc. The Boda discovery was formally announced on 9 September 2019, and the result propelled interest in Alkane of the Boda district. With the gold business gaining its own momentum, 2020 saw Alkane demerge Australian Strategic Materials, which is ASN, separating the Dubbo Critical Materials project and leaving Alkane focused on gold plus the Boda district porphyry pipeline. The demerger was implemented on 29 July 2020, and momentum continued along in May 2022 when Alkane released an initial Boda resource of 10.1 million ounces of gold equivalent, which was a part of 624 million tons at a grade of 0.51 grams per ton of gold equivalent, which is a genuine scale signal for a long life porphyry hub. And remember, ladies and gentlemen, for a porphyry deposit, grades of 0.51, grades as low as 0.51 grams per ton as well, are, I believe, economically extremely viable. And this was a discussion that Mr. Brian and I were having just a couple of days ago about porphyry deposits and the Riverside Gold Project. On the operating front, February 2023 delivered the major step for TGO, development consent for the Tomingley Extension Project, permitting mining at Roswell and San Antonio, and lifting the processing rate allowance to 1.75 million tons per annum. Alkane Resources also committed the realignment of the Newell Highway as a part of the plan, which is obviously beneficial for any gold project. And FY24 was the first year of the new phase, with Alkane commencing underground mining at Roswell in April 2024 and pouring 57,217 ounces of gold at an AISC of about 2,000 Australian dollars an ounce, which helped them generate nearly 200 million Australian dollars in gold revenue. On the growth pipeline, July 2024 brought the Boda-Kaiser scoping study, evaluating multiple scale scenarios for a long-term bulk tonnage. By FY24 year end, the combined Boda and Kaiser resource stood at 8.3 million ounces and 1.5 million tons of copper, a platform big enough to invite partners. And now, what does this all add up to? It adds up to a 10-year arc where steady Tomingley cash generation founded district exploration. The Boda discovery gave Alkane an option on a tier 1 scale copper gold project. The Tomingley extension underpins more than 100,000 ounces of potential mid-decade. And the Mandalay merger diversifies cash flow and metal mix, which de-risks the build versus buy question while creating optionality on Boda-Kaiser development timing. So now a question for Mr. Brian. With Roswell ramping, San Antonio slated to lift the Tomingley Gold Operations above 100,000 ounces per annum by FY27, and the Boda-Kaiser scoping study signaling very large capex needs, how should investors think about Alkane's capital allocation over the next 24 to 36 months? And where do you think the company stands from a valuation standpoint?
So with Alkane Resources, the company has been a good manager of its capital and its ability to generate value. The fact that it was running a small-scale mine in Tomingley for about 10 years and turned that into something bigger and was generating a pretty comfortable operating surplus and operating margin in those years, even through certain times when the price of gold came down while oil went up, shows that it's likely to be able to pull the same type of outcome going forward. Now, Tomingley itself is a larger scale mine now because it's expanded its processing plant capacity. It's also found more gold in its neighboring region. You also have Costerfield, which has gold and antimony is becoming increasingly attractive because of the strategic nature of that metal for defense purposes and also for communications, I believe. The company also has a small mine out in Sweden to add further revenue to the company. Now, these three operations at the current price of gold and oil should continue to generate a relatively solid increase in its cash balance. What will the company use for that cash balance? I think the wild card is the deposit that you mentioned about, but we haven't actually gone into detail, which is the Boda-Kaiser gold copper mega deposit. What I mean by mega deposit is there is 9.8 million ounces of gold equivalent ounces of metals there. There's a lot of copper, and Alkane Resources ran a scoping study, so a very early stage mine plan back last year, I believe it was. And I think Boda-Kaiser is expected to produce at least 17 years of gold and copper under its first stage of production. And I think it was going to produce just over 110,000 ounces of gold a year. And I don't want to accidentally give out the wrong details. So let me just quickly scroll through and find the company's details. So about 159,000 ounces of gold in the first 5 years each year, and 35,000 tons of copper each year for the first 5 years, and the life of the mine is at least 17 years. So that's a huge operation. The cost of building the mine, obviously, is what stands in the way of this happening in the short term. It would cost at least $1.7 billion based on the company's estimates last year. And I think in about 3 or 4 years' time, when the company is better positioned to bring this mine into construction, or at least there may be enough scale and information for them to reach a final investment decision, I think the cost of building the mine would probably be over $2 billion. But Alkane Resources by then would have built enough of a cash pile, and they might be able to also get access to debt capital to make it happen. So should the company bring the Boda-Kaiser deposit to production, think about deep grade mining, which Northern Star Resources recently purchased for $5 billion. The Hemi deposit was going to produce almost 500,000 ounces of gold a year. So Alkane Resources currently has a market value of about $1.6 billion, I believe. And that's from 170,000 ounces of gold equivalent production across 3 operations. The bigger the operations, such as Tomingley expanding, actually adds multiples to the value. And when you get a mine like Boda-Kaiser in action, that would be potentially a multi-billion-dollar company. Or in terms of a fully 100% owned basis, it's possible that Alkane Resources might decide to sell part of the Boda-Kaiser with a bigger partner to expedite development. But either way, there is significant growth potential for the company because of its existing properties, the exploration leading to more resources and expanding the scope of operations, plus that wild card of Boda-Kaiser, which could launch Alkane Resources into the league similar to the likes of Evolution Mining, and also Perseus Mining, which are in the $5+ billion to $15 billion market cap range. Now, I'm not going to put a timeline to that, as I said before, simply because I don't want to create unrealistic expectations. And secondly, mine development is inherently a speculative exercise. Plus, there are complications in development, cost blowouts, ramp-up challenges, unforeseen circumstances once you begin operations. For example, the processing plant might take a while to actually get into the sweet spot, and also in the mining process, you might take longer time to access the ore that you would expect. And these types of things do lead to what we call longer lead times to delivering the type of performance which the financial and the operational projections suggest.
Right. Thank you so much for that, Mr. Brian. And yes, Alkane Resources is yet another company which, as we made very clear, has had a very interesting growth profile. Their market cap currently stands at about $1.5 billion. And there's a lot of discussion about the company's current underperformance, especially in this quarter. But a lot of exciting things coming up for the company ahead as well, especially if they achieve their growth plans by FY27 of 100,000 ounces per annum. So, yep, that's about it.
I think I might comment a little bit about that quarterly performance,
Yes.
that the supposed disappointment about it. So, Alkane Resources released the September quarter update and stated that, and perhaps I might directly quote them. So the company group guidance is 100. The company produced 18,335 ounces of gold at Tomingley, 8,612 ounces of gold at Costerfield with 198 tons of antimony, which is equivalent to 9,492 gold equivalent ounces. At Bjorkdal, 8,580 ounces, and that led to a consolidated 35,527 ounces of gold and 198 tons of antimony, which is equivalent to 36,407 ounces. And the comment was from Nick Erner, the managing director. It has been a significant quarter of the merger with Mandalay completing early August. Alkane now has 3 operating mines who together produce 35,527 ounces of gold and 198 tons of antimony over the full quarter. With the repayment of our $45 million debt and a one-off transaction cost of $25 million behind us, we have a very solid balance sheet with $191 million of cash, bullion, and listed investments at quarter end. What held people back was the comment that there was expected slower production at Bjorkdal over the Sweden extended summer vacation period. And I think a few people on Hot Copper were saying that's a disappointing result. They really should have done their due diligence before they proceeded with buying Mandalay Resources. But let's look again at the fact that the Bjorkdal sort of production is slower than expected because of the extended summer vacation period. Hey, summer is over in Sweden right now. It's they're into autumn, and of course there's winter coming. The key to this is to remember that if you're buying shares in a company, you shouldn't. I shouldn't say you shouldn't. Traders will trade the momentum. Investors should focus on the longer term growth potential. Sometimes the quarterly disappointment of in the performance of a particular quarter lead to a sell-off in this type of environment, especially, may well be a welcome opportunity to buy a pullback, especially given that we have discussed on several of our videos about how many of these large companies are overvalued or at least generously valued, and it's increasingly difficult to buy producers with relatively attractive valuation. So when you get temporary disappointments for these producers, this is a great opportunity to potentially buy the dip. And provided that gold continues its very good run and oil continues to remain relatively low, you found yourself a company that is a solid performer selling at a more attractive price. Isn't that something that's, I would call that a gift that's actually giving itself, rather than chasing companies that are doing very well and are trading at overvaluation territory. So I thought that was probably worth bringing up, especially given you did correctly mention that there was a few people who were disappointed with that performance, leading to the share price pulling back. And factor in also, a lot of these gold stocks pulled back significantly because of what happened in Thursday night's trading in the US. Come Monday, there's a pretty good chance that this coming week, should gold continue its upward trajectory, that sell-off we saw on Friday might be just a blip in the radar.
Right, and definitely a great opportunity, Alkane Resources as well, because considering the context, I remember that just a week ago we were talking about the major miners being overvalued, or at least generously valued, as you stated. I just looked it up. Northern Star Resources is a $35 billion company now, and Evolution Mining is a $22 billion company now. We were not saying these numbers definitely last week or 2 weeks ago when we were talking about the market cap of these companies. So, ginormous increases in market cap for these producers, Evolution Mining, Northern Star Resources. I had a look at the analyst ratings as well, and while Northern Star Resources is still on a buy as per analyst ratings on TradingView, Evolution Mining is now neutral. It's not even a buy, leave alone a strong buy. And there are a lot of analysts recommending holding their positions in Evolution Mining or even selling at the moment. So definitely goes to show a lot about major producers in the moment. And in contrast, the opportunity that producers like Alkane Resources and Kingsgate Consolidated present to you, considering its intrinsic operations. I'm not sure about the macro environment being favorable for them in the long run, or at least in the short run for sure. But definitely great opportunities. So thank you so much for the coverage, Mr. Brian. We hope you guys enjoyed listening to Mr. Brian's viewpoint on these two companies, as well as the growth stories that they have had in the past few years. And we would like to remind you again that none of the content discussed in this video qualifies as financial advice. And if you are on the outlook of advice, we recommend that you seek a licensed expert. And with that being said, thank you so much, everyone, for watching. We'll be back next week with episode number 12. Until then, see ya.
Yep, and ladies and gentlemen, if you want more directed guidance on what stocks to buy, sell, and what prices to pay, you can always sign up for my Factor Investment Research newsletters, the Australian Gold Report, and also Gold Stock Pro. Just check out the website link, www.fatpal.com.au. And as we said, enjoy the week ahead, and God bless.